Inventory Management Interview Questions and Answers. Subscribe the Video Education SME Point.
How will you achieve accuracy in the inventory? Cycle counting procedure and stock taking procedure are two procedure models that offer high-level accuracy. These procedures entail several details and can be adapted to solve your peculiar problems. Cycle counting procedure can account for discrepancies amongst the quantities found in stocks and is recommended to maximize the value of audit and minimize the pain in physical count. Stock taking procedure also offers an accurate basis for planning and stock control procedures as its process enables you to assess the level of stock loss within your business sites. What should be recorded in a physical count of inventory? Conducting a physical inventory, the classification, location and number in stock of a good should be recorded. What's the most important thing in warehouse management? The essential factor in warehouse management is the safety rules. Warehouses with safety as a priority would include wearing appropriate PPE as well as paying attention to warning signs and signals. Such a warehouse management system provides consistency, efficiency, and quality control to the warehouse process, which helps improves every stage of the fulfillment process. What type of WMS, warehousing management system, or TMS, transport management system, or an ERP, enterprise resource planning, application you have used in the past? What you liked most in that application, and were there any limitations in that application? WMS, TMS, and ERP are tools, software, that play a crucial role in inventory optimization of a business operation. These tools also help optimize input and output processes alongside slotting, packing, and shipping duties. WMS comes in three major types: integrated ERP, supply chain execution modules, and standalone warehouse management. What is total stocking cost? Total stocking cost is the cost to the store of holding a good in its inventory. The stocking cost consists of the carrying cost times half the quantity in inventory and the order completion cost times demand divided by the quantity. Procurement considered as an important element of inventory control. Procurement is considered as the backbone of inventory management, such that the inventory managers are required to create and maintain liaison with vendors and suppliers and customers to make sure that supplies are obtained in time and further there are no shortages when the need rises.
How would you reduce distribution costs? To reduce distribution costs, the main areas to focus on including inbound and outbound freight cost, storage cost, indirect costs such as energy, customs and duties, and of course direct manning cost. The purpose of reducing distribution costs is to save up more potential and contribute to the bottom line, profitability, of the business. Why is it important how we mention Incoterms? Incoterms are factually standardized international delivery terms, serving as a contract between buyer and seller. The term describes all costs, risks, and tasks related to the transaction of goods globally. So, Incoterms are essential as they make up the most important trading conditions. What does inventory affect in a store? Inventory levels and their values can affect the income of the store, the amount of taxes paid, and the total stocking cost.
What is the difference between FIFO and LIFO? The difference between FIFO, first in, first out, and LIFO, last in, first out, exists only if the unit costs of a product are decreasing or increasing. The FIFO approach assumes that older products in an inventory are sold first and uses their production costs. The LIFO method assumes the newest products in an inventory are sold first and uses those costs instead. What must be recorded in a physical count of inventory? The classification, location and number in stock of a good should be recorded when conducting a physical inventory. What is the purpose of safety stock? To control the likelihood of a stock out due to the variability of demand during lead time. When should reorders be placed? The reorder time for a product/inventory majorly depends on the control system being used and its lead time. In case of fixed order quantities, reorders should be placed when the safety stock is reached, where in case of fixed period systems the reordering is done at set time periods. Also in just-in-time systems, reordering is based on matching the demand with supply, such that for just-in-time a close watch on inventory levels is required such that the reorders are placed before stock out of goods. What are the important considerations in inventory control? Inventory control to work at its best, a store must consider the costs of acquisition, carrying, ordering, and stock out. The store must also look at its reordering system, its budgeting for inventory, insurance and forecasted demand.
What is inventory control? Inventory control is the process of reducing inventory costs while remaining responsive to customer demands. By this definition, a store would want to lower its acquisition, carrying, ordering and stock out costs to their lowest possible levels. However, a store would need to have enough inventories to meet any needs of its customers. What are the duties of an inventory manager? Develop and implement an overall inventory management plan that includes materials procurement, inventory stock levels, and facility needs and personnel management. Also, as an inventory manager, you are required to provide direction to staff members who handle inventory control and ensure any overstocking or shortages are handled efficiently. What are the types of reordering systems that can be used in inventory control? The fixed order quantity uses fixed quantities of goods ordered at various order points to replenish inventory. The fixed order period uses fixed times of reorder with various order quantities to replenish inventory to preset levels. The final system, just in time, uses a constant flow of goods to match the level of demand. What is the importance of OQ? OQ level is the point at which stocking costs are at their lowest point for a given item. What makes OQ work for inventory control? OQ works if its four assumptions match the case it is used on. The assumptions are: A. Annual demand, carrying costs and ordering costs can be estimated. B. Inventory level is divided by 2, no safety stock, goods used uniformly and are gone by next order. C. Stock out, customer responsiveness and other costs not considered. D. No quantity discounts.
Inventory controls are followed. What can I expect? Inventory policy. You should be able to realize important advantages in inventory control. The first is reduced costs for inventories, along with reduced amounts of inventory. Theft and shrinkage should also be reduced if inventory policy is followed. The final benefit will be increased profits for the store. When should a physical inventory be taken? A inventory should be taken at least once a year. If items are perishable, seasonal or highly demanded, our inventory should be taken more often. Can forecasting help in controlling inventory? Yes, through the use of forecasts, inventory levels can be set to meet the demands while keeping levels as low as possible. What is cycle count? A cycle count is an inventory auditing procedure, which falls under inventory management, where a small subset of inventory, in a specific location, is counted on a specified day. Cycle counts contrast with traditional physical inventory in that a full physical inventory may stop operation at a facility while all items are counted at one time. It helps to see the difference between actual stock and book stock. Book stock is the stock available in the system. What is opening stocks? At the beginning of a reporting period, or after a cycle count, the stock available in your inventory account is the opening stock. It is also called as beginning inventory. So, there's an opening stock. Then, lots of transactions happens, items are purchased and sold. And finally closing stock is calculated. What is closing stock? Closing stock is the amount of inventory that a business still has on hand at the end of a reporting period. This includes raw materials, work in process, and finished goods inventory. The amount of closing stock can be ascertained with a physical count of the inventory. It can also be determined by using a perpetual inventory system and cycle counting to continually adjust inventory records to arrive at ending balances. Closing stock is an asset. In inventory account, it is under debit. In trading account, it is under credit. Because it is still not traded. Why is procurement considered such an important part of inventory control? Procurement is the backbone of inventory management. Inventory specialists have to create and maintain liaison with vendors and suppliers and customers to ensure that supplies are obtained in a timely manner and that there are no shortages when the need rises. When should a physical inventory be taken? A inventory should be taken at least once a year. If items are perishable, seasonal or highly demanded, our inventory should be taken more often. What are finished goods? Inventories are those completely manufactured products which are ready for sale. Stocks of raw materials and work in process facilitate production, while stock of finished goods is required for smooth marketing operations. Thus, inventories serve as a link between the production and consumption of goods. What are the important considerations in inventory control? Inventory control to work at its best, a store must consider the costs of acquisition, carrying, ordering, and stock out. The store must also look at its reordering system, its budgeting for inventory, insurance and forecasted demand. What is COGS, cost of goods sold, formula? For manufacturers, cost of goods sold, COGS, is the cost of buying raw materials and manufacturing finished products. For retailers, it's the cost of obtaining or buying the products sold to customers. Opening stock, beginning inventory, plus purchases, closing stock, end inventory, equals COGS. If the company is in a service industry, COGS is the cost of the service it offers. COGS can help companies work out how much they should charge for their products and services, and the level of sales they need to sustain in order to make a profit. The price paid for products is particularly crucial to retailers, as it is often their greatest area of expenditure. But all businesses can benefit from an analysis of COGS, as it can highlight ways of improving efficiency and cutting expenditure. What is the purpose of safety stock? To control the likelihood of a stockout due to the variability of demand during lead time. Do you have regular visibility into excess and obsolete stock, and is it linked to targeted action plans to sell off or reduce this inventory? Typically, excess and obsolete stock stems from ineffective sales forecasting, planning, or using a business model that fails to factor in product complexity and life cycles correctly. Inventory leaders establish processes to determine why excesses are being created and then develop a plan of action to sell it off. In some instances, the fear of the write-off has led to a large build-up over time of obsolete inventory. What is an order quantity? An order quantity is the amount of goods that an order requests be shipped to the store. What is the objective of XYZ analysis? Following are the objectives of XYZ analysis. Take out issued items value from stores, take out received items value at any day, take out surplus items value. Are you able to break down your operating inventory into the three major categories when reporting levels: safety, replenishment, and excess or obsolete stock? This breakdown makes it easier to make sound decisions about appropriate levels for each of these three areas. It helps determine the minimum safety stock needed to provide an insurance policy against supply chain problems, either from manufacturing glitches or distribution uncertainties, so that customers get what they ordered. It's useful for pinpointing the amount of inventory required to replenish deliveries every 2 weeks. And it helps companies find ways to avoid a backlog of excess or obsolete inventory. What should be recorded in a physical count of inventory? Conducting a physical inventory, the classification, location, and number in stock of a good should be recorded. What makes a good forecasting model? A good forecast model will have reasonable costs. The accuracy of its forecasts will allow good decision making. The model will have ample data available for its use and a relevant time span. The model finally will have a low interference level. Do you know what is an order point? A order point is a point in time at which an order is placed to replenish goods in inventory. How can the value of inventory be determined? The value can be found using 4 methods in inventory control. The first is the specific cost, in which each item's cost is added together for the inventory's value. A second method is to use the weighted average of the costs for a period to determine value. A third method is first in, first out. In this method, value is measured using the latest costs of goods while working towards the beginning of the period until all goods in inventory are valued. The final method is last in, first out. In this method, the costs of goods at the beginning of the period are used to determine the inventory's value, much like FIFO. What is total stocking cost? Total stocking cost is the cost to the store of holding a good in its inventory. The stocking cost consists of the carrying cost times half the quantity in inventory. What is work in process? Inventories are semi-manufactured products. They represent products that need more work before they become finished product for sale. How do you calculate inventory turnover? Inventory turnover is a measure of how quickly a company sells its inventory in a year, and is often used as a metric of overall operational efficiency. There are 2 popular ways of calculating inventory turnover. The first method consists of dividing the company's annual sales by its average inventory balance, whereas the second method divides annual cost of goods sold, COGS, by average inventory. What is work in process? Inventories are semi-manufactured products. They represent products that need more work before they become finished product for sale. What is an ABC indicator? An ABC indicator is an indicator assigned by the ABC analysis procedure. An ABC indicator provides details of the consumption value of the material involved in the ABC analysis. The ABC analysis is performed by multiplying the current price of the materials by their quantity. The different consumption values are given as follows. A materials, important parts, high usage/consumption value. B materials, less important parts, medium usage/consumption value. C materials, relatively unimportant parts, low usage/consumption value. Thanks for watching Education SME Point. If you really feel this video is useful, subscribe and share with friends. Have a great day.